Hello traders and welcome to another video review. Today is Monday, April 22nd, 2024, the beginning of the new trading week. Let's find out what's going on the economic calendar today. Bank of China loan prime rate has been set at the same level, 3.45% overnight. And this is widely expected, so no surprise here from the People's Bank of China. Central Bank of China didn't actually explain anything why they left it like this. They just behave exactly as expected by the market participants. Loan prime rate 3.45%. CBI industrial trade. And then we got data from the Canada New Housing Price Index and LMPI data. Both of them are scheduled for release at 2:30, and at 5:30 we got the ECB President Christine Lagarde to give a speech, and that's it. That's everything what we have in the calendar for today. In the sense that those events are either medium important or very important. As you can see, all of the medium important events has been listed here. So basically kind of a non-event Monday ahead of us. So let's just find out what is going on the majors, and we are going to start with the euro dollar. The 4-hour chart of the euro-dollar is showing us a movement to the upside towards the supply zone. It used to be the demand zone. Nevertheless, we tested back down towards 1.0611, then we bounce back up, and at the early trading of the London session we can see that we are testing this lower supply zone at 1.0671 back again. Momentum is kind of a negative, but it's skewed to the bullish side, so bulls are kind of in charge of the market right now, at least since the low at 1.0602 was done. Nevertheless, it doesn't actually look like the bears are done with the movement to the downside. Okay, so it looks more likely like the test of the big supply zone, and then of course we might see some sort of the reversal. Only a sustained breakout back above 1.0695, the upper supply zone level, and then back above the technical resistance located at 1.0725 with the breakout above 100 periods moving average might change the outlook to more bullish. Nevertheless, we are still trading below this trend line here. Doesn't even make sense to make it extended for now because the price is far away from it, and we are still trading below the key supply zone, the next key supply zone located at 1.0794, let's say. Okay, so the outlook remains bearish. The outlook remains bearish, and if we switch to daily to see the weekly view, you can see that any new low below 1.0602 opens the road towards 1.0521. So that's another, let's say, 80 pips of the ground. Nevertheless, on a daily time frame chart, we hit the extremely oversold market conditions with the low at 1.0602. Now the bulls are trying to move higher, so we might see whipsaw trading all the week long, unless there are some, let's say, news events or data that might change this situation. Nevertheless, for now, daily looks like a kind of it looks negative, but kind of a possible for some sort of the pullback, and the daily and the 4-hour chart is still messing around and testing the local technical resistance and the local supply zone. So as for now, for the beginning of the week, we don't have any change in our scenario. Euro dollar done because of the UK data. Let's find out what's going on the British pound. And as you can see, the British pound broke below the key short-term support. Let's update this chart to the newest data. The first thing is that this is no longer the key short-term support, but I will leave this label for later. Now that zone here is now the technical resistance, and of course, because there are two very important technical resistance levels, we have the supply zone. If we have the supply zone, let me just change this colors to red, so there is no doubt what is going on here, and I will just move this supply zone a little bit lower. So that used to be a key technical support, now it's key, let's say, now it's key supply zone. We tested the next technical support at 1.23475, but the market low was done at 1.2366, and now the market is trying to move even lower towards the next target, 1.2289. So let me just move this one. I think there is one more lower below. Yes. The key short-term support, it's not even short-term support. Now, the key short-term support apparently is way lower, is this level here, 1.20 basically, yeah, 1.2026. Yeah, so that's the key short-term support, and that's the key long-term support. Nevertheless, there are a few supports a little bit higher, like as I said, 1.2287, 1.2198. So don't so the bulls don't have to be afraid that we are going to spike straight on 300 pips. No, so situation whatsoever right now. And momentum, as you can see, momentum is definitely bearish, and the breakout above the level of 50 was rejected already. So we got the movement to the downside, and now down we go. So next target, 1.2287, and this extension to the downside should continue because the momentum is still very weak. US dollar to the Japanese yen. What is going on here? As you can see, we continue our up move. We got this short-term trend line here, but it didn't stop bulls from breaking higher. Big downside movement here towards the level of 153.60. Very long down shadow, and then 1, 2, 3, 4, 5, 6, 7 candles, green candles to the upside. So we are again narrowing the level of 154.80. We should break it soon, and then test the this is the 50 periods moving average at 155.88, and then move even higher. Momentum still positive. Momentum still very strong. As you can see, we go from the level of 60 to the level of 75, from the level of 60 to the level of 75. So this momentum is this momentum behavior is typical for the trending market, and this is a trending market, which is why we are going to oscillate around the level of 70. A little bit down for the pullback, up we go. A little bit down for the pullback, up we go. Only if we dive a little bit lower. A little bit means below the level of 50, neutral level, and then down towards the negative territory, possibly towards the level of 30, then we can call it a valid correction. As long as there is no such a behavior on the RSI, we cannot say that the uptrend is done. So right now the uptrend is being continued because those levels are really high. 153 is the highest level in 2024. As you can see, is highest level in 2023. Is the highest level since the highs of 2022, located at 151.99. So right now there isn't any situation like this in the history. I mean, not on this chart. So it's basically better to just look at the current situation with the horizontal levels, technical horizontal levels, support, resistance, and of course some moving averages together with the momentum. This for the US dollar to the Japanese yen. And last but not least, the halving is done. What is going on after the halving is done? So as you can see, we still are above the level of 60,000. We dipped on the Bitcoin down towards 59,000 and $569. Nevertheless, after Bitcoin halving was a non-event so far. We got this situation completely controlled. There was no surprise with the event of the halving. So we are now done with the halving, and the market starts to rally back up just as expected. So this big green zone established at the beginning of the March 2024 is still the key short-term and mid-term technical support, of course, yeah, these two levels, and the demand zone. Now we are on a daily highs 66,394. We are heading towards 67,426 next technical resistance, and then big supply zone is waiting. So if we see this situation here to extend to the upside, and then test of the supply zone is done, then we can call it a post halving rally, and this is what we expect, because the next target for bulls is located, the nearest next target for bulls is located at $75,000. Nice strong upward pointing momentum on the 4-hour chart indicates another possibility of the rally extension to the upside on Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.